So we speak to analysts, we speak to traders and investors. So many of them are having to kind of fend off these conversations about what a stagflation-proof portfolio looks like. How does this complicate things for central bankers as well?
Well, that's right, Heidi, and good morning. It just really returns us to the debate of the year about what inflation is transitory, might be able to be tolerated a little bit longer in the near term versus what might be longer lasting, or at least is making an impact, enough of an impact on consumer confidence right now to dent growth outlooks. So, we've seen some signs over the past few months, especially in advanced economies, that some of this is somewhat transitory in the sense that some of these recovering sectors are going to have those temporary price jumps. We know about the supply chain entanglements that are driving up prices, and that hopefully will wane sometime in the medium term or maybe in the near term. But these commodity prices, as you've flagged all morning in the markets, are really quite a new concern, a fresh concern, with the Bloomberg Commodity Spot Index at its highest in a decade. You've tracked the jumps in oil, natural gas, cotton, food, and others. And so, there are, of course, some winners in this: Russia, Saudi Arabia, Australia, energy exporters. But the bigger concern now is, where does it dent confidence? It's already started to dent confidence in some economies, and will it derail demand to the point of needing more accommodation? Christine Lagarde doesn't seem to think so. She wants to warn against, warn against overreacting to price shocks, and a lot of economies have signaled willingness to kind of keep on track to remove accommodation. But we'll have to see how this plays out, and emerging markets are especially affected there.
Especially places like Thailand. We do have the Bank of Thailand decision today. How will all of these concerns that you mentioned factor in?
Well, it's been a big question about whether Thailand might be kind of an outsider pick to cut rates. We don't really see that as a likely scenario, and Bloomberg Economics is not seeing a cut for today. That's not really their preferred tool. The governor has told us, it's more of a blunt tool, and there are other ways about this. But there's no doubt about it, they do have a lot of growth concerns. Thailand has been hit this year, and of course more recently with the Delta surge that kind of derailed their plans to reopen parts of the critical tourism sector. So they've got to find some solutions here. I think what we'll hear today is, hopefully some views from the BOT on, whether or not quantitative easing might be on the table, which is what Tamara Henderson over at Bloomberg Economics predicts. Perhaps they'll talk a little bit more about the fiscal aid and where that's needed. We do know the government recently raised its debt ceiling, so they gave a little bit more room for that sort of accommodation. So they're in a tough spot. The 0.7% growth forecast for the year might stay. It's been a pretty mixed outlook over the past month since their last meeting. So we'll just have to see, how optimistic they are about getting this recovery back on track.